Because
Is
it's not
being
being
recorded.
recorded. Well, is it recording now? Now it is. Okay.
Now it is. Okay, so the session is being recorded. So again, welcome everyone, and I expect a few more people to join us. This is the second NetSuite webinar that we are having. The first one is about incoming transmittals and how to record them. This one mostly focuses on outgoing transmittals, plus some transmittal payments, so how to send and receive the actual cache that accompanies the transmittal data. So uh, this is very this is a question that we receive a lot about, and so hopefully this next hour, for the experts of you in this call, you'd still learn a couple of nuggets. For those of you who are just starting in terms of using NetSuite, then hope it's not too overwhelming, but you'll still pick up handful of stuff that you can immediately apply in your work. And so the chat is available to everyone, and David will sort of manage that chat and will ask them at appropriate times. We'll try to answer everyone's questions during this call, but for those questions that at the end of the call we didn't have time to answer, we'll send a follow-up email to answer them. So feel free to just type in your questions in the chat, and at appropriate times during the call, we'll address them. And yeah, so as we move forward, hopefully everyone will. I'm not quite sure how much time we have for you to actually directly, immediately apply the things we're going to discuss this hour, but it will still be helpful for you to be logged in into your NetSuite roles, primary role that you have. And perhaps as we go through the seminar, then you can see how it looks like within NetSuite. And yeah, so let's dive in. Things we want to focus on for this webinar is understand entries that trigger transmittal items automatically versus entries that require manual transmittal entry. So that's basically the two main things that transmittal entries are created. Either they're triggered automatically by some actions in the system, or we go into the system and create them manually. And then there's various types of transmittal entries. We'll look at each of them. And then we'll look at how area level, and then how to make transmittal payments, and then the actual entries, journal entries that these transmittals make. Let's start with some definition of terms. We've gone through some of these terms during the last webinar, but it's always helpful to be reminded so that we're on the same page when we're mentioning these things later. A transmittal entry is a record of information for sending funds from one entity to another within Campus Crusade for Christ International. And so it has donor information, it has accounts, it has RCs, responsibility centers. And it's important to remember that it's for us sending from one CCCI entity to another. So this does not cover sending to an outside entity, for example. That's not within our our umbrella. And then a transmittal entry triggers the creation of an ICJE, and we'll talk about that later. So there's four different types of transmittal entries: donations, subsidies, charges, and other income. And we'll dig into each of those later in more detail, but it's important to remember up front that these different types trigger a different set of GL accounts and responsibility centers in the different entities involved. What is an ICJE, or intercompany journal entry? It's a journal entry that it involves more than one entity. And we'll define what an entity is later. But if you are sending funds from country A to country B, then an ICJE hosts hosts actual journal entries in both your country, in that other country, in the area offices in between. So the transmittal system creates interconnection entries between the initiating and receiving entities. And then there's a entity. So whenever I mention the word entity, it means it's a CCC reporting entity. So it's a country ministry, an area office, or school. Some countries have multiple entities within them to take care of different reporting and approval needs. For example, an entity is a standalone. It has its own chart of account. It has its own set of responsibility centers. In this particular context of transmittals, so we're sending funds from one entity to another.
Timothy, can you hear me now? Oh, great.
David,
Hey, is there a way for you to minimize the Windows menu on the right side of your screen? It's covering up a little bit of your slides.
it's interesting.
Thank you.
Okay, so now that you can see more of the slides, two different to define terms. Many people intuitively we use the term the receiving entity, for example, just to minimize the confusion because both country A and country B can be receiving in that sense. So just going forward, when we say source entity, it's the entity receiving the funds, say for example, directly from the donor. And the source entity sends funds to the destination entity, which is the ultimate destination of the funds, for example, where the staff member is based. And then this is always the ultimate start and ultimate end. And there's a number of entities, for example, the area offices in the middle. But whenever we talk about transmittals, these two are the beginning and end of the funds. A few more terms we'd like to define as we dive in are the three different global responsibility centers involved with transmittals. IT clear, whenever you see that in your RC balance report, where you see funds in your IT clear, that means the transmittal system sent your entity some funds, and it is very important for you to move them to a correct local RC. This needs to be done as often as possible so that it doesn't accumulate and that you have a correct of local finances, sense that the funds up in the correct local RC. IT contra, think of IT contra as a payable or receivable. So if your country office, for example, the balance in your country contra would be the funds that you need to send out to the area office or the funds that you're expecting to receive from the area office. There's not a lot you can do about the IT contra balance. Actually, there you shouldn't do anything about the IT contra balance in the sense of creating journal entries against IT contra. The way for IT contra to be influenced is by creating transmittal entries, then subsequently creating transmittal payments to actually send out the cash associated with those transmittal entries. Finally, the global RC represents funds meant to go out of your entity and going to other CCC entities. The RCs are the ones that are used by the transmittal system, and R is certainly a good foundation in understanding what the transmittal system. If you have any questions about this, feel free to write them in the chat. As we move on here, one very important thing that most people new to NetSuite, some time to really wrap their head around, is the fact that NetSuite, major difference that we're doing from before NetSuite is that the information is traveling on a different track than the actual cache. So before, normally most countries would receive once a month the information totaling a certain amount of dollars broken down into very specific transmittal entries, and at the same time, a cash amount in their bank account exactly of those transmittal entries. Now with NetSuite, it's different. Single day, your country can potentially receive the information coming in that only at certain points will, for example, your area office actually send the cash. So every single day when some other country sends your country donations, other income or charges, you will start to see the information either immediately into your RC balances of the local RC or go into IT Clear or in IT Contra. When the cash eventually comes in, say at the end of the month, then the IT Contra or the payables or receivables will start to get cleared. Time you can send out the transmittal entries and immediately RC balances in other countries are affected. And then at the end of the month, when the cash between your country and the area office, that clears out those receivables. And it's a big difference between our previous system and now, and it's important to be able to recognize that. So something more about global positive balance means you need to create transmittals. If you have a balance in your global RC, then you need to create transmittal entries to eventually send them out. We'll look at that later. A negative balance means you have sent out transmittal entries without putting funds in the global RC. And um, one of my favorite illustrations of the transmittal system is the train, which is transmittal funds travel through a very specific path, but then funds have to get in there, go through the train, and get out. And we'll refer more to this illustration go forward. Part of transmittal entries are donations or internal donation transfers. Constitutes the biggest bulk of our transmittal entries. Whenever we think of the donations or internal donation transfers, we think of the global system RC as a bucket where internal donations or donations come in, and then we make transmittal entries for them to go out. Look at this type of transmittal entry. There's two primary ways that donation type transmittal entries are created, either by entering a donation cash sale, a donation transfer, and then the system will automatically create the transmittal entry as a result of that. Will actually just in and create manually a transmittal entry. If you did create a donation cash sale, if it's sent to a global designation, that's when the transmittal system will create an entry automatically. And so the transmittal entry will capture the information that will be used to populate the ICJE. Created a donation, then the transmittal system creates a transmittal entry out of that donation. That transmittal entry will subsequently create the intercompany journal entry. Just the L or accounts or RC information, but the donor information is captured as well. Happens every 10 p.m. UTC. Not instantaneously, but once a day, the system will get all of the transmittal created meant for global designations and create entries for them. Of homework, if you can for this call, go into your NetSuite and review donations, review the related transmittal entries, and then review the intercompany journal entries created from them.
Timothy, have a question, and you can hold this until later if it fits better somewhere. But Ira's asking about, when when we're sending things through global system, there ends up being little tiny rounding balances after assessment, and they're growing. They're tiny, but should she's wondering if we should zero these out at some point, or if the system will do that. They're just zero point zero 0.01, 0.02, but wondering what the deal is with that.
Yeah, that's a very interesting question. So yes, as you know, the assessment is created automatically, and what is sent out is net of the assessments. So there are rounding off errors that happen. The system will not automatically take care of that. So especially if at the end of the year you see these balances, it would be up to you to clean that up.
Thanks, Timothy.
Thanks for that question. So the next type of transmittal entry would be charges and expenses. And this is for instances where, for example, your country hosted a conference and staff members from other countries attended that conference. And so for their lodging or food, or they broke a window, you want to charge their host country for those expenses. It, in this sense, is a GL account called 1519 system. And expense reports, journal entries, and bills go into the 1519. Then when you create the transmittal entry with the type charge, then it will draw 1519. Like donations, this is not an automated system. So the task then for your country is to review the balances in the 1519 account created either by expense report, journal entries, or bills to create the corresponding transmittal entries, figure that out. So this is the passengers get on the expense report, journal entries, and bills, send them off through the charge transfer. So that know that many of these expenses are not created by the finance. So staff members can log into their employee center and create an expense report and select charge to other CCC, and that will have a GL impact on the 1519 account. So it's important for the finance office to review the balance in account 1519 and confirm that all debit transactions in the account indeed are expenses that need to be charged for CCC. They have to be reviewed carefully by the charges and expenses. Once a transmittal entry is manually created, the transmittal system will automatically create again the associated intercompany journal entries. So this will land, and we've talked about this in the other seminar. This will land destination entity account, expense account 8999. It's like just an other expense, and then it's their responsibility to move it to the appropriate expense account in their local chart of accounts. Does not know that you, as the source entity, also have no idea what their chart of accounts is. So the more information you can put in the other important details to help the corresponding counterpart finance team in the destination entity know how to place these transmittal entries, it will be helpful for them. So there's no limit, there's no character limit. on the other important details. The novel in there, just everything that happened. Think of it as the golden rule. Um, Information you need if you were the finance leader, you were to receive this. Just so after this call, you can review, generate the transactions that hit your 1519 system account, and see if all of these really are valid charges for other CCC entities, and go ahead and create a.
Timothy, question from Alan. He says, I don't see the ability to charge other CCC entities in an expense report. Not sure why an employee would do that anyway.
So in the expense report, there is an expense category in expense report called charge to other CCC. It's available to everyone. Maybe there's some language settings here where it's differently in some entities than others, but it's available. Like after this call, I mean, after the content part of this webinar, I can alt tab to our NetSuite screen and show where that is exactly. Remind me about that. I'll show you where it is. And so see the chat. Alan can see it now. And not sure why an employee would do this. Yeah, because so if it's a category in the expense report, and um, normally finance office and employees can go into the employee center. It's there to be able to for them to see if there's an expense that happened. Say perhaps they're in an RC and they hosted an event. Someone from another Campus Crusade entity, then they can enter that as an expense. I'll be after the content part to show where that is.
I'll do that, Timothy.
Another part is other income. Now, there's a lot of misconceptions about other income. The easiest way to define other income is it's the opposite of charge. Say that with a grain of salt. So, other income means if looking at the charge, for example, you are charging another CCC. Same transaction. Say you are a finance office country that sent staff members to another country, go to a conference. You want to pay them for the accommodations of your staff members. Then you create another income. So it can be the exact same event. It just depends on who initiated the transmittal entry. The impact would be similar, not exactly the same, but similar. So for the conference that country A hosted, it's either country A creates a charge or country B creates another income. Now, one of the mistakes that we often see is, and we'll talk about reversals later, other income is not a reversal of charge. So if you mistakenly created an other income, do not create a charge to reverse it. I'll show later how to properly do reversals. Because, as I said, the GL impact is similar, but not exactly the same. This is the bucket that gets filled in and emptied with regard to other income. So only journal entries will, and then it gets transferred out through another income type entry. With other income transmittal entries, first step to create a journal entry. First, you put funds into that bucket, then review the 8999. And we do have a saved search in NetSuite. I'll show you that later. And then for so that you can see what needs to be sent out. Once the transmittal entry is created, again, it will create the associated intercompany journal entries, and we need to utilize the other important details similar to earlier to convey all the information that the destination entity. After this call, please go ahead and review the transactions in your 8999 account and see if there's entries that need to be made, or um, on the other hand, see if you had created transmittal entries which you did not put the funds in 89994. In some countries, they have its negative balance on 8999 because of this. So the last part is subsidies, is the last type of transmittal entries, subsidy. And so it's, again, it goes to the global RC. For example, if you are an area office, you're an area office, if you receive subsidy from world headquarters, they will land into your global RC. Or if your area office initiates subsidies to the countries within your area, then you need to transfer funds from an RC in your entity and then transfer them to the global system RC. And so, however the money, however the funds arrived in global RC, whether you manually transferred them from a local RC or you received them from WHQ, then a transmittal entry needs to be made to send it out. Now, we'll talk about this more details about this approval, but as most area offices, and I say most because you can choose to disable this, but most area offices, when by default, when you receive funds, when you either receive funds from the global office or you create funds yourself, it has to be approved first before going straight to the countries. So this is unlike donations, charges, and other income. This is very specific to subsidies. So a number of times I hear questions about, I know Orlando sent this subsidy, or I know this other area sent this subsidy. Why is it not appearing in my country? And so as an area office, you need to go to your approved journals, and we can also show that after these slides. It will be basically in the same place where you approve local journal entries. But in addition to the local journal entries, then they will be these intercompany journals that the office accountant also needs to approve so that the train can move merrily along to the countries. Subsidy transmittal entries. So either flow through subsidies that must be approved by these two roles, accountant or finance leaders, or initiated by the entity and created via journal entry. So, um, so again, it's important to be reminded that we have two different area entities: the local office and the subsidiary continental office. So sometimes people have some subsidies that originate from the local office going to the countries. It still goes through the continental area office, and so the approval still needs to happen there. We do have these situations where flow-through subsidies are not approved in full. For example, World Headquarters sent 20,000 to a country in your area, but you only want to send right now just 10,000. One way to address that is we have asked US ministries to only send subsidies in $10,000 chunks. That's why when you receive them in the area office, it's easy enough to send those chunks along. But so what happens is if you're not sending the full amount, the transmittal entry was created from Orlando with a destination entity of the country. if a partial payment needs to be sent, then the normally what's done is you create a new transmittal entry from your area and send out that in the chunks that you wish. But this just creates some complications in terms of having, for example, reverse the original transmittal entry. So we can address that in greater detail later, or if you have specific that through email. But the recommendation right now and is really to approve the whole thing, which is why we ask the U.S. ministries to just send them in manageable chunks, so it's easier to do it. And then last point here, transmittal entry is manually created to initiate the flow of funds to a destination entity. More about subsidy transmittal entries. Once a transmittal entry is manually created, say others, transmittal system will automatically create the ICJE. Again, it's important to distinguish the difference between the transmittal entries and the actual journals. Because when we're in NetSuite, we search for them in different ways. So we can either search by the entries or search by the GL impact, i.e. the accounts or RCs that were affected. So those are the four different types of transmittal entries. And still with subsidies, they always end up in 6611 global RCs. See if you need transmittal entries for them. But as we have looked at the four different types of transmittal entries, donations, other income charges, and subsidies, it's important to remember that neither of them are reversals of another. Creating reversals are different. So they create a unique set of journal entries, and understanding exactly the GL impact on your books is important. And so we're transition a little bit to payments. So as I said before, the information, all of these four types of transmittal entries create the information. And the end result is it immediately affects the RC balance in the source country, in the destination country the next day, which is one of the things that people have really wished for decades. As an international organization, will immediately see RC balances affected. Um, and so the funds, I will talk about when the cash is actually sent, the transmittal payments and the cash movement. The first step is created when payment on transmittal entries is made. So transmittal payments, like the transmittal entries, create an intercompany journal entry. And so the balance to pay is always calculated and always only use these four accounts: 1239, 2239, 53. So one entity's payment balance to another entity is always the sum of these four accounts plus the vendor or customer field. So NetSuite has a vendor or customer field. So for example, country A needs to send money to country B, then it's the balance of these four accounts that uses the country B in its vendor customer. And so the net payment is recorded in account 1311 system. 1311 is the standalone for the bank. So then it clears the 12, 22, 53, 63, and it records them in 1311 because NetSuite does not know the local bank account destination country. So it always debits 1311. Then it will be up to the local country, the destination entity, to make a journal entry moving the balance in 1311 to your local bank account. And so NetSuite does not actually make the bank transfer or wire. So you must make the bank payment at the same time that you make transmittal payment. So when you are sending money to another, your area office, for example, or your area office, you're sending money to a country, then two things have to be done at about the same time. Go to your bank, online banking, send the money there, and then go to NetSuite and record the transmittal payment. Now the journal entries involved here is, so when payments are made and received via your bank account, and then you actually record sending payment to a receiving entity and receiving payment from a sending entity. Again, NetSuite uses 1311 as a standalone for your bank account. You just need to move the balances via a journal entry from 1311 to your local bank account. So steps 2 and 3 here, and in any order. Essentially, you don't have to do it steps 2 and 3 that order, but steps 1 to 3 must all be done within a short time period. So by create transmittal payment, pay from the bank, and journalize cash movement. So ideally, we would do all this in a short amount of time. So that's about the payments. And after these slides, we can go to NetSuite to show some ways to how that looks like in NetSuite. But like your turn, if you create a transmittal payment, and then you can review the intercompany journal entry lines that are related to that transmittal payment. Uh, we can have some questions at this point. That's pretty much the main Oh wait, before I leave the slides here, I have a few other important points to remember. We're not necessarily covered in what we've discussed, but some of the things to note. Transmittal entries, if your country, your go live month is say October. At October 1, then transmittal entries start having a net GL impact in your country's books. Let me jump to what that means. So these accounts will start having balances in your country's books at day 1 of your go live month. And it's pretty tricky to reverse these. So when say I'm not quite sure who in this call exactly are, but say if you're in a country where you said your go live was 3 months ago, but you haven't actually started using NetSuite at all until now, then as of 3 months ago, these accounts started having balances in them, which perhaps we might need because you're only starting NetSuite now. Or like if you are having your go live this month, see, even if you're not actually entering transactions yet, perhaps you want to start entering transactions at the third week of the month, for example. Make sure that you do not enter the transmittal related entries for this month because they're going to already be there. And so going back here, reversals. And so this is another I can show when we log on to NetSuite. Where's that reverse transmittal button? If you create an entry that you need to reverse, there's a big reverse transmittal button that you need to press. It will duplicate everything from the original transmittal and just reverse the debits and credits. So it's going to be on the same date. It's going to have the same GL accounts, have the same everything. And this is important because you want it to have the same date so that it wouldn't have any issue or things like that. And you want to make sure that all entities that had ICJs created for them in the original transmittal entry will also have those ICJs reversed. So because if you just create a journal entry reversing the impact in your books, then that's not going to affect the books in the other countries. If you click the reverse transmittal, it will affect the whole flow. And then payments. If you need to reverse a payment, it needs to be, yeah, so it, right now our mechanism is someone with access to the whole thing needs to be able to edit the journal entries created by the payments. And at this point, it can't be done by someone in your country. It has to be done by someone from the um, headquarters. So if you sent a payment that needs to be reversed, please send an email to netsuite.help and outlining the like when you did the payment, to whom, if you have transaction numbers, that would be helpful. All right, that's the content, and let's see if there's questions we can answer. And I'm also going to shift my screen to my NetSuite. Going to the U8, and I'm going to make my screen bigger once I'm there. Don't worry. Any questions that we can answer at this point? Shift from slides to NetSuite. Chat. Any questions there?
Timothy, if you had anything queued up in SB3, I may have just changed it. Sorry.
It's okay. Yeah. For the call, and then I got logged out. So go back. So one of the first things we wanted to show is I need to log in as where the charge to other CCC was. So said we wanted to show that. And it's always in expense reports. So again, as a full access user, a finance office user, or an employee, everyone should be able to go to this screen, which is create a new expense report. My role cannot create new expense reports. So log into a sample level role. As I go here, I see a question in the chat. Which RC should be selected by an employee charging another CCC from an expense report? One important point with regard to expense reports is that the only RCs, as far as expense reports are concerned, is approval. So the RC determines the flow of approvals. In this particular case, so here in the expense category here is charge to other CCC. And the GL impact of this, it will hit the account 1519, then whatever. So because this is a balance sheet account, it will not affect the RC balance. So the system will just look at the responsibility center selected here and use that to determine the approval flow. This is, again, this is all the user will see. They wouldn't see the GL account. It's just the category charged to other CCC. But at the back end, the impact would be a debit to account 151. One thing I wanted to show was how to move from transmittal entries to their corresponding journal entries. So for example, if I go to a list of transmittal entries, and there's a very useful way to see what were the journal entries that were created as a result of that. go to the journals part. So if you're in the transmittal entry screen, and you will be able to see the journals that were created in the different entities. So I go to, because my role right now is a New Zealand accountant. All I are the entries in my books. But if my role someone from a, with a higher level, then I can see all the entries created from my entity up to the other entity. And so this is how you go from transmittal entry to journal. And then the other way around would be go to, right now my screen is going to a journal entry. This is an advanced intercompany journal. I would go to related records, click related records. Once I click related records, I can see the transmittal entry that created this journal entry. I can switch back and forth between the transmittal entry and the journal this way. I know if I see a journal, I can see the particular transmittal that created it. So one other thing that I said earlier was that you search for them in different ways. So you go to transmittals, payments, and entries to look for the different transmittal entries or payments. But if you want to look for particular accounts or for the particular journals, then it has to be done through a transaction search. Okay, so let's see anything else we want to have shown while we're here. Okay, so Ira, ask in the chat, when you go to transactions, payables, pay bills, and select 2239 to other CCC, see lots of debits and credits from transmittals that cumulatively should be pay them for 2239, be clean in some sense. Um, Not necessarily. So again, this is one way to see the transactions, but this is not the main method in how we clear the um, charge to other CCC, for example. So yeah, there's different ways to see the transactions, but for example, when we want to clear charge to other CCC, we go to 1519. We want to know what the payment balance is, then we go to calculate transmittal payment balances. So sometimes it's not very helpful to dig into. I mean, it is helpful to dig into all these transactions, but that's just not the recommended way to clear them. If that makes sense. Show reversal. One of the so I'm going to log in as a finance leader, so only do a reverse transmittal as a finance leader in Sandbox. This is I'm going to look at the different transmittal entities that we have. This one. So we can only reverse a transmittal with the status of processed. So if it's processed and I dig into this right, then the reverse transmittal button will be right here. Clicking the reverse transmittal button will reverse all of the journals associated with the transmittal. Now, if you cannot see the reverse transmittal button, the first question to ask is, am I logged in as a finance leader? The second question is, you can see in this particular entry, there's no reverse transmittal button because the status is ready to process. So if you need to reverse a transmittal entry that has not yet been fully processed, this is a particular situation that you encounter, then you can send an email to help. So right now, so there's two tracks to transmittal entries: the accounting track to it, the GL impact, and the CRM impact, which is the donor information. And for some particular transmittal entries, the donor information for fixing some aspects of that, that's why it's the CRM part has is not fully coming through, although rest assured that the GL part, the accounting part, has come through. So if you need to reverse something, just okay. So we have 4 more minutes. If there's anything else that people want to see perhaps demonstrated or some other question with regard to outgoing transmittals or payment, to ask them. I'm scrolling up in the chat right now to see if there's anything missed. Okay. Well, we are available, and by we I mean the implementation team looking at the netsuite.help@crew.org email. But I don't know, David, if I can show this, but going to just looking for a particular slide. Okay, Alan has a question. Well, Alan is looking at the question. Many countries are not quite aware of the help mailboxes in their areas. So it would be good if you can, as a country level, ask the area office help. And so because they usually would know more about the context of your question, something deep, technical about NetSuite that area level cannot answer, then we'll gladly step in. Okay, Alan has a question. Balance sheet account, shouldn't RC be none? Yes. Well, at the end of the day, the RC balance only looks at income and expense transactions. So it's not hurting anyone, the balances, if there's an RC in a balance sheet. But yes, ideally, normally balance sheet accounts RC should be none. But sometimes there are things in NetSuite where we couldn't be helped. Like, for example, you've talked about the expense reports. Um, some the GL impact primarily of the expense report is whatever RC you put in the header, it populates down to all of the line levels, which sometimes includes a balance sheet accounts 1519 in this case. But again, that's going to be only for informational purposes, but it's not going to affect the RC balance. But yeah, you're right. It's not our normal business practice to have an RC on a balance sheet account. But in this case, that's just how NetSuite does it and not hurting anything. Okay, so we can perhaps end the recording right here, David. Um, Thanks everyone, and I can hang around for a few more minutes to answer some more questions after we officially end this webinar. Um, and before we end this, really would love to hear suggestions about what you want as topics for future webinars.